From Los Angeles, TraderInsight.com presents Dr. Adrian Manz in the war room and at the helm with today's look at stocks and sectors on the radar.
For TraderInsight.com, this is Adrian Manz, and this is Stocks and Sectors on the Radar for Tuesday, January 20th, 2009. On Friday, Dow Jones Industrial Average up 68.73 to close at 8281.22. We had 2,016 stocks advance, 1,039 decline, and NYSE total volume of 1.62 billion shares. Not bad going into a holiday weekend. Now, as far as the Dow goes, we're still up at above that 8,000 support. The move lower on Wednesday and Thursday, getting right up in there and retesting that 8,000 line. That came a little bit quicker than I think everybody expected. But of course, on Thursday, once the move was in, we got a very, very fast, very hot reversal on this thing. Just what I would have expected, just what all of you would have expected. 8,000, big psychological number, gonna just sort of halt things right in their tracks. A lot of people, a lot of buys, automated buys there. A lot of programs coming in to buy up the market and capitalize on that swing higher. So we had a big move. My guess is, or my bias still is, to the downside. I think the news is going to continue to be bad, but we do have the inauguration of a new president, which everyone is very, very excited about. So there's a lot of positive sentiment in the country. I saw recently that now almost 80% of Americans have a very hopeful opinion about what's going to happen over the next 4 years or 8 years, whatever their opinion may be. That is certainly something capable of keeping the market afloat for a little while here. But I think in general, once reality sets in, once we get people looking at those economic numbers again and saying, what's going on right now? What are we dealing with right this minute? There's probably going to be another move, another test of the downside. Now, we've also got the S&P 500, obviously, and the NASDAQ 100 NASDAQ comp to talk about. S&P 500 still below that 888 level. We closed at 850.12 on Friday. So S&P's got some work to do if it's going to get back up above that range. I think it's probably unlikely over the next couple days. We're probably going to see it. If it does happen, we would have to have probably 4 or 5 days of constructive price action before we see the S&P 500 able to break back above that level. Got the NASDAQ 100. Same thing. It's up into that sort of moving average soup there. It's got support and resistance right in that range. Gonna be interesting to see what can happen in the NASDAQ when some of these tech names are called to the carpet this week. But we got earnings all week, got earnings all month, so let's see if maybe we can't get something moving here instead of just being in this very, very tight range on the NASDAQ 100. Go up, go down, but give us something. Then we got the NASDAQ Composite. A little bit better range on this thing, but still pretty much just about the same kind of a thing. So for those of you who trade the Qs, diamond spiders, it's oddly enough, diamonds and spiders are probably the more exciting place to be right about now. So the VIX, the volatility index, is trading at 46.11. That's down almost 5 points from Thursday, but boy, that really says something. VIX above 40 for as long as it has been is a real statement. Now, we've had a few guys on TV talking about a reversion to the mean, and they're sort of implying that mean is still down around 22 or so. My opinion on this is we've been up in the 40s or 50s since back in late September, early October. What that says is that the mean has probably shifted. We've got a skewed distribution now, and the question is not, is the VIX going to head back down to 20? The question is, how long is the VIX going to be reverting to the new mean that we've established here? As long as it's up in this range here, we're going to get lots and lots of volatility in all the markets, lots and lots of volatility in all the individual stocks. Now, speaking of stocks for Tuesday's trading, I've got Clorox. This is household products, ticker symbol CLX. There's a switch hitter setup. It's a short. We're going to be looking at a move down to about 51.01, maybe down 49.98, something in there, 50.98, I should say. 51.01 down, 50.98. That area is going to be where I'm looking to see if Clorox doesn't break down and move in for a retest of those recent lows. We've got Holly. This is in the oil and gas consumable fuels. If I see strength in the sector on on Tuesday. I'm definitely going to be watching this fastball setup here. Got a fastball with a potential entry, 23.11, 23.15, somewhere in there. If HOC gets a boost from the market, then there's lots of room for this one to expand on the upside. The range expansion on Friday was pretty good. The volume expansion was all right. All things told, it's a pretty decent fastball setup, although you would like to see it coming on the heels of a little bit steeper move to the upside. That consolidation is just a little bit long and sort of approaches being a congestion range, but for the time being, I'm definitely going to keep HOC on the radar for my trading. Now we've also got Valspar Corp here. This is in the chemicals sector. This is ticker symbol VAL, 1930, 1931, somewhere in there. This is a line drive setup. If we get a trade above 1930, 1935, let's say, as sort of an upper range on the validation, then I'm going to be looking for a long side entry. I need to see strength in the chemicals, chemical sector, CEX, of course. And if we do see that strength, I'm going to want to see an opening range on this one that allows me to define a support and resistance area that I can use as a stop loss. Then we have in biotechnology, got a nice looking switch hitter set up here in Genentech. This one's a little tougher to trade, a little higher price than some folks are used to dealing with. But remember, a year ago they were all this price, right? Year and a half ago there was nothing trading in the $5 to $10 range. Now it seems like everything's trading there. It's got a nice big trading range on just about every given day. This thing does about a $2 range on an average day. Trade above 85.52, 85.55 on DNA. That's Genentech. On strength in the biotechs is going to have me interested in a long side entry. Then the final thing that I'm going to look at is I'm looking at the gold sector here, in the metals and minings in particular. Looking at Anglo Gold, nice little line drive move on Friday. Trade above 26.25 in AU is going to have me interested in a long side entry on that one. I've got Harmony Gold Mining. These guys somewhere above $10.35. The price target on it is probably a little bit shallow, so this is just pretty much going to be set up as a scalp for me. Ticker symbol HMY, Harmony. Going to need to see, once again, on all these gold stocks, a nice opening range that defines a nice tight stop loss. Otherwise, I'm not going to fool with them. But if I see strength in the sector, I will definitely look at Anglo Gold, Harmony, and Agnico Eagle Mines Limited. Now, Agnico is a little bit weaker of a setup since it did have that drift back, that bleed back on Friday down into those Thursday or Wednesday and Thursday tops, actually Monday through Thursday tops. But I still like it. I like it above 51.05, 51.10, somewhere in there. If we get trade up above there on strength in the sector, I will definitely have this one on the radar for a possible continuation entry. Now, don't forget, use protective stops on every trade. And for TraderInsight.com, I'm Adrian Manz.